The following is a paid program. Advice and opinions expressed during the program are solely that of Empeople Credit Union, not WBEV or Good Karma Brands. I'm Wally Lukashansky. Good morning, everybody, and I'm very excited to welcome onto the show Maggie Pavano with Empeople Credit Union. Maggie, we got to talk a few days ago, but I'm really excited to dive in and learn a little bit more about Empeople. How are you doing today?
Hey, Wally, I'm doing great. Thanks for having me.
I'm happy to have you. And today we got to talk about mortgages. And before we start diving into the X's and O's, what people need to know out there, I'd love to start a little bit about your background, how you came to be with Empeople, and what your current role is.
Sure. So I have been in the mortgage world probably for just over 20 years. I started in the business as an originator. So started with being passionate about home ownership and helping people just have some financial success and build generational wealth through home purchases. And then obviously gaining even more financial well-being with refinancing and grabbing equity in their home and leveraging it. And so after being a lender for quite some time, I wanted to move into more of a coaching role. And there was opportunity with Empeople Credit Union, formerly known as Dear Employees Credit Union, to manage the team. And so I've been with Empeople for just over 10 years. And we have a team of 8 really seasoned loan officers that I coach to make sure that members have a really great experience during their home loan process with the credit union.
Well, Maggie, I'm fired up to talk with you today because I am the worst with money in the entire world. So I'm going to be trying to learn as much as I can here today. But before we get too much, you kind of explained it a little there. But for people that aren't very familiar with Empeople, can you tell us a little bit about you guys and what you do and why you are the people that we should be turning to when we have a question?
Yeah, so we're local in your guys' community, and we've been proudly serving our members since 1935, and we are really proud of our people. And I know everybody says it's their people, but I'm really passionate about it is our people, and we really work to help our members reach their destination based on their terms and where they're at in life. And so since 1935, we've been serving that community in the Deer network, and now we've even grown in different markets, such as Maine and the lovely Wisconsin market, serving the communities there to help them with their financing, their banking, and their overall financial goals, just to have success with them.
Well, and that's one of those things for me, too. Like, when I was growing up, I just was like, banks are one thing, credit unions must be another. You kind of get to do a little bit of both, the best of both worlds. And I want to dive into that today. But as we enter into your expertise here, you're very, in tuned with talking mortgages. I'm going to be leaning on you today. So, Maggie, are you ready for me?
I'm ready.
Well, good. We're going to need you to be, because here we go. I need to start with this. Do buyers need to wait until rates come down? Everybody hears about how high they are. Is this the time to be buying, or what would you be doing?
You know, I actually think that the rates today are pretty stable. Anything that's really high or really low, that's not normal. I think during the COVID market, we saw 2-3%. Man, was that nice. But it wasn't going to last, and we knew that. And so anything in that 5 to 6% range, that's pretty standard if you look at the historical average. And so while the rates seem high, they are higher than what we've seen in the last 5 years, but we try to kind of fit our members into more payment ranges. We know that homeownership, it's a huge purchase, but we also know that homeownership is one of the strongest ways that families can build long-term wealth. And so I want to kind of give you an example. We had a member that came in last week that wanted to possibly be a homeowner, and they were concerned. They were qualifying for, a 6% mortgage, and they thought, man, that rate seems really high. And we just asked some questions and said, what are you paying now for rent? And they said $1,400. And we said, well, let's try to back into that same payment if you're comfortable with it and see what that kind of house size you'd qualify for. So when it all came about, they qualified for right around a $200,000 home. And that just put them at ease to, instead of focusing on the rate, because you really can refinance after the fact. If you can fit your payment into your current financial budget, let's get you in. And then you can always watch the market, work with our relationship managers, and if the rates come down, we can refinance in the future and put better terms to the home.
Oh my gosh. So see, this is again, I am in an apartment right now. This is not something I've gone through quite yet. So I always hear the refinancing and all that. That's as simple as, like, let's say you lock it in at 6% now, and then in 5 years' time, it's down to 4.5%. They can go to you, and then you can explore the idea of refinancing at that point.
Yeah, you bet. And, let's say that someone bought a house with a different credit union or bank. You as a consumer can go anywhere for a refinance. You don't have to refinance with the existing bank or credit union. Obviously, if you're with us, we would love you to bring your business back to us. But it's so important to actively manage your mortgage. And that's what our team is dedicated to do. We have a team dedicated that when you're done with your mortgage closing, we're not done with you. We help you actively manage your mortgage. So if there are better terms that come down the road that can save you money on interest, save you money on your monthly payment, we want to make sure to nudge you and say, hey, Wally, you can lower your payment by $100 if you look to refinance now. Do you want to look at your options? And then just kind of be an advocate for you so that you're not stuck in really high interest rates when the market is giving you something better.
Well, and you even said it before, because a lot of people out there, they want to time this thing perfectly. The odds of getting it timed perfectly isn't going to happen. So if you're able to lock it in with you now, you're going to take care of them. And it sounds like you guys are very active in actually trying to improve rates even after you already have a partnership with these people.
Yeah. I think that's what's kind of special about when you have a relationship that you trust is it's not just about that one transaction. It's about that broader relationship that you feel like you have people on your side. And I think that's the care that's needed when you pick a bank or a credit union to work with, is that you feel like you have a really great advisory board, per se, that that can watch things and make sure that you're on task. No one's sitting there watching CNN about what the market's doing. There's some of the population that does, but I know I have a lot of friends and family. The last thing that they're watching when they have time to relax with their family or on the couch is turning it to know about, like, what's going on in the market with mortgage rates. And so that's why our team of experts kind of has your back, and we watch those for you so that if you get into terms now, we know what your bigger financial goals and pictures look like. We're able to help you maximize those or be in a better position as you continue to grow in that home.
Well, I'm happy you're looking out for me, because you're right. I'm one of the people that if something does happen, it might take me 2 weeks to even know it happened, Maggie.
Yeah.
So that's what you guys are for, to make sure that you are looking out for us. And with that, I know you're going to be trying to make sure we mitigate our mistakes, or at least limit them, for first-time home buyers. I know that there's a lot of mistakes out there, but what are some of the biggest ones that people can try to avoid?
Yeah, good question, because especially in today's market, if any of the callers on the line are current home, like people that are looking to buy a home, inventory is tight. And when inventory is tight, there's a buyer influx and there's a lot of competition out there. And so one of the biggest mistakes first-time home buyers or even home buyers make is waiting too long to talk to a lender. They say the chicken and the egg, which one comes first, the lender or the realtor? You want a realtor. The realtor is the boots on the ground, negotiating for you on your behalf, making sure you get a good deal. But a lot of times that realtor is going to point you back to a lender and say, you go get pre-approved first. And it's really important that you are pre-approved or pre-qualified so that the lender has time to look at your situation to get you pre-approved. A lot of times they give you a letter, right? And you hand this letter to your realtor, and that shows that you're a serious buyer, and that when you go look at that home, the sellers or the listing agents also know you're a serious buyer. I like to kind of give this example to some of our members that come in. If you and Joe, you both walk into that house, and you're like, this is the one, and you haven't talked to a bank or a lender yet, and Joe has. Joe's got that letter in hand. Who's ready to make an offer? Joe is. And so it's just so important in today's market, when there's light inventory and high competition, that you know exactly what you qualify for, that you're comfortable with the options that have been presented, and that when you're going and looking at homes, you're confident in making a firm offer so that those sellers and the listing agent know that you're a serious buyer.
Well, see, I am thinking of Christmas with the Cranks. Mrs. Crank goes in to buy the last honey ham, but somebody beats her to it. This is your way. You can get in front, and you can actually be in front of the line. So you get out of there with your Christmas ham, and it's a lot bigger deal,
Wally,
Maggie.
you get that honey ham, yes.
Like, this is your house and potentially your first home. So yeah, make sure you're talking to you guys. And for people that don't know how to set that up, is it as simple as just giving a phone call and seeing what you guys can do?
Yeah. I think a lot of people, we have to think about like the myths. They think it's this very complex, time-consuming, stressful experience. And if you're looking into home buying, refinancing, or purchasing maybe a second home, give your lender a call. And it's just a matter of saying, hey, I might be interested in buying a house, all the way to someone that says, I found a house and I want to make an offer. But even if you're kind of like the tire kickers, what they say, it's okay to call in and get a quick pre-approval. And our lenders, what they do is they kind of just slow down the process for you, and they took a look at your financial situation. They're going to review your credit report, your income, your assets, to kind of look to say, like, all right, what do you have? How much are you looking to put down for a down payment? Or do you have any gift funds? Do you have any family members that are helping you with making this offer? What kind of payment range are you comfortable with a new home? And so that pre-approval process can be done in one phone call. We can take that application over the phone. You can also apply online with us. But it's if you don't buy in the next 90 days, that's fine. And there's no obligation to you. We have a lot of our members call in and they say, hey, I'm looking to buy next year even. I just want to see what I look like today. And we love those type of members. Those are our prepared members that want to say, hey, where am I at today for a snapshot? Here's where I want to be in 12 months. How do I look? And I think what's great about that is when you know how you look, you can make improvements or you can make tweaks. Or you can know, like, man, I'm a qualified buyer now. I don't need to wait a year. I can do this now. And so when thinking about buying a home or wanting to know what that looks like, a simple call or email into our team, and we can have a conversation. And most of the time, in that same phone call, get you pre-qualified, letter in hand, to go look at a home.
Well, I know I like the term tire kicker, by the way, because I think that I fall into that very, very firmly, Maggie. And part of that is because I'm one of those people, I'm like, I want to have all the ducks in a row. I like how you said it's almost like when you were a kid, it's not a secret. If you do your homework, you reach out and you learn as much as you can. When you actually get to the point of buying a home, you'll be prepared and you're going to be better equipped to get the home of your dreams. But to get the home of your dreams, I know a lot of people are thinking about, what do I actually need as an initial down payment? And for me, I don't even know what that number is, what the stratosphere would be.
What? But down payment, Wally, just based on like your experience, what have you heard that you need for a down payment?
Oh my gosh, Maggie, I don't even have a zip code. I would have just said, let's say I'm looking at, let's keep it an even number to make it easy, a $200,000 home. I don't know. I would guess like 50,000, like a quarter of it maybe.
And that's normal. That's what people think. And I think when your previous question about one of like the biggest mistakes first-time home buyers make is assuming, right? And like listening maybe to like some streamlined media. You need as little as 3% down to purchase a home.
So $6,000 in my instance there.
Yeah, right. And so now obviously terms are based on, how much you put down, your credit score, your debt-to-income ratio. So the more you can put down, obviously, the less your payment. Affordability, right?
Of course.
We don't want that to stop people from getting into home ownership. Because if you're making a rent payment of $1,400 and you find a house that fits into that payment range of $1,400 and it puts you into home ownership to create generational wealth for years to come, it's a great move. What's nice, too, is as low as 3% down. We also offer... currently, we have a $10,000 grant that's available to income-qualified members that are purchasing a home, and that can go towards down payment, closing costs. A lot of our members get gift funds from a relative to use towards down payment and closing costs. And one of my favorite ways to get some extra cash into the transaction is seller credits. When you're negotiating a purchase with the seller's realtor, the realtor to realtor, and they're going back and forth, you can negotiate the seller contributing towards your closing costs as well. And so that's a great way to keep cash or your savings in place. And to me, cash is king. And why I say that is, I can't sleep at night if I don't have a certain amount of money in my nest egg, just in case, the just in case fund. And so when I purchased my home 8 years ago, I probably could have put 10% down. I chose 5. And why I chose 5 is A, the payment fit my budget, and that gave me that extra cash to hold on to in my nest egg for comfort and to make sure I could sleep at night knowing I had that extra nest egg. So just because you have access to all this funds to put to down payment, if the payment fits your budget, if it works based on what your future goals are, it's okay not to have 20% down or 40% down. We see a lot of members get into home ownership with 3% down, and they have great success as they grow in that home.
So let's keep with the example I was using before. So $200,000 home, in theory, I can have $6,000 to actually put up front on a home. But like, if I'm not sure about if I'm going to be able to sustain payments, that's another thing that people can go in and actually kind of map out how this would look. And then they can figure out if they're comfortable doing that. Am I getting that correct?
What's really important when you're working with, there's a lot of websites. You can jump on a calculator, like mortgage calculators. But I think, too, I always go back. I have 4 loan officers on my team that have been with us more than 10 years and in the industry more than 25 years. And with anything, experience matters. And so if you're a first-time home buyer and you're talking to an experienced loan officer that has helped thousands of first-time home buyers buy their first home, they're going to give you a recommendation. They're going to say, based on your financial picture and where you are at life, here's what we see a lot of our successful first-time home buyers do. And I think that's powerful, and you don't get that everywhere. And I think it's so important to kind of ask. And I listen to my team's calls a lot on call reviews, and I hear them a lot of times saying, hey, if you were my cousin or if you were my aunt, here's what I would recommend. And that's so true. That's what Empeople Credit Union, our experts do, is they treat you a little bit like family and say, hey, this is a good idea, or this isn't a great idea, and here's what I would recommend. And you can do what you want ultimately, but to have seasoned experts that have lived it through thousands of transactions, I think is really powerful.
We're speaking with Maggie Pavano with Empeople Credit Union, Vice President of Mortgage Sales. And speaking of mortgages, Maggie, I have to ask you too, because a lot of people think of the mortgage process and it can be daunting, it can be scary. How long does this process usually take, and how do you make that as easy as you can for people?
Sure. It can be daunting. And I think with any job, you become an expert, like when you work in that field itself. Like you're on the radio, you know more about doing your job than I would ever. And so I think that's what's important, is that work with experts, that you don't have to know everything. They're going to guide you with your best interest between the loan officer and the realtor. And once you come into the arms of a loan officer or realtor, they're going to help guide you. Like I stated below, getting pre-qualified can happen as quickly as 1 day. And that pre-qualification letter is good for about 90 days. And why that secret number is 90 is that's how long your credit report is good for when we pull your credit report. So your pre-qualified is good for 90 days. After that 90 days, if you didn't make an offer or didn't get the house you want and you're still looking, you can re-up it. We can re-pull your credit and just make sure everything looks good. But getting pre-qualified can take as little as 1 day. Now, let's say you get pre-qualified and you go look at the house and it's the one, and you make a sweet offer and they accept. You get that back to the loan officer, and we can close as soon as 30 days later, or as long as 60 days. So it can happen really quick. Or we've actually seen people say, hey, I made an offer. I'm not closing for 90 days. What are my next steps? And so it really is up to you. Some people have to finish out their rent contract. Some people are relocating to a different city or town. Some people like to buy a house and then sell their house afterwards. So it really depends on your timeline that we can work as quickly or as long as that would take based on your needs.
Well, it's one of those things, you hear the old expression, how do you eat an elephant? One bite at a time. It sounds like you guys, you're sitting next to us with a knife and fork trying to help us through the elephant, understanding that, this could be scary for some people, but that's why you have you sit next to us being able to help guide us along the way.
Yeah, too is, we really focus on ending every conversation with, here's what you can expect next. And I think that alleviates a lot of those nerves or unknowns, because the normal consumer is not an expert on mortgages or that process. And it's so important that when you are at that closing and you're handed those keys and you're going to move into your new home, that you felt like this experience was so great, and man, that wasn't stressful. There's a lot of stuff that happens behind the curtain, and a lot of things that aren't cute that that your loan officer and our team are taking care of with the legalities, the realtors on your behalf. But it's so important for us that when you're going into that really cool experience of home ownership, that experience is great for you. And yes, we have the elephant in front of us, and we are just bite by bite taking it out for you.
Well, that's good. We'll save you the big fork and knife. We're going to need you to take a bite when that comes to the day for me. So I hope you're ready, Maggie. But for a different phase of that home ownership life, talking about refinancing now, with the current landscape, I'm curious, is it still worth refinancing at the current time?
I've heard some loan officers say you date the mortgage, but you marry the house. And what that means is that there's always opportunity to change your loan terms. And so for the last, probably as of today, well, last month probably we had a lower on interest rates, but over the last 2 years, they were significantly higher, about 1.5% more. So those members that bought a house in the last couple of years, they're coming back, or we're reaching out to them and saying, hey, there's better loan terms available. And we then determine, is refinancing worth it? I think some people say the 1% rule. If you can lower your interest rate by 1%, it's worth it. And I kind of say maybe. And why I say maybe is lowering 1% on an $80,000 loan note might save you $80. Lowering 1% on a $600,000 loan note is going to save you hundreds of dollars. And so maybe if you're carrying a really high loan balance, maybe 0.5% does the trick. You don't need a full percent. We also take into account the break-even point. Refinancing is not free. We try to streamline that process to minimize any expenses that we don't need. But it's important that not only is there a benefit to refinancing, but also what's your break-even point? Well, if you come in, and even if I can lower your payment by $100, and let's say that you're not going to break even with closing costs for 2 years, and I know that you're leaving in a year, we're not doing it because it's not worth it. You're not gonna go into the green based on those closing costs and your monthly savings. And so it's not just about the rate and the payment. It's about interest. It's about closing costs. Every situation is so different that I think that's what working with the direct loan officer and the expert. Not only will they nudge you and say, "Hey, here's a good time," they're also going to show you the pros and cons. And most of the time, one weighs out between the other. But sometimes it might just be your decision. And we're just giving you the data, and you can make the best decision for you and your family.
Well, yeah, it sounds like you give multiple different avenues, different kind of strategies of when to approach it. I like that you're looking out for us if you know what we have coming down the road. I'm curious then, when should someone then consider a home equity loan instead in this case?
Yeah, I love our home equity products. Some people that bought during COVID, 5-6 years ago, those rates went low, 2-3%. And some of our members are locked in for 30 years at 3%. So they come to us and they're like, man, I thought I was going to move, but I love my 3% mortgage. I don't want to move. But I kind of hate my kitchen. I kind of hate my bathroom. And they want to access the equity in their home. And so the equity is the difference between what you owe to the bank and the value of the home. And you can access that equity and get a second mortgage and to either do home improvement or access it to do a debt consolidation or get an equity loan for just in case for emergency purposes. And so what's nice about a home equity product, it leaves your first mortgage untouched, but you're still able to access your equity to do some major expenses like a renovation or home improvements. Or we have a lot of members as well that are coming in to do a full debt consolidation, pulling in all their high-interest credit card debt, wrapping it into one low, convenient home equity loan, and saving hundreds of dollars a month.
Well, I know I keep kind of harping on this, but this is so new to me, and I know it's so new to many other people that we use that word again, daunting. There's a lot that can go on when you are in the process of buying a home, refinancing, whether you want to go with a home equity loan. I'm curious then, for Empeople Credit Union, why is it for me, the consumer, makes sense to work with a credit union like yourselves?
You know, and I'm pro credit union, of course, Wally.
I would hope you are.
I love us, you know. But I think whoever you choose, it's just so important that you feel like you can trust them and they have their best interest. And what I love about our team is it provides you local decision making. Our processing, underwriting, loan officers are all in-house. And so sometimes when you work with a really big credit union or a really big box bank, they kind of outsource some of those pieces of that process. And that can create delays in your process, that can create a poor experience. You know, you're calling in to ask a question about, you know, did your loan payment get made? And you got some third party that's like, when you say, hey, I used to work with Maggie, she did my loan. They're like, who's Maggie? You call into our mortgage servicing team and you say, hey, I did a mortgage with Maggie. They're like, oh, we love Maggie. She's great, because they know everything's in-house. And so when working with a lender or even your banking, you want to work with someone that you trust and someone that has some local decision making. And I really just think that they are acting in your best interest rather than the profits of the credit union or the bank.
Well, it sounds like, and correct me if I'm wrong, this is where a lot of people struggle with they feel like they go into a place like this and then there's immediate pressure. And
yeah.
with Empeople, you can go in with questions, with your curiosity, and there's not that immediate like, hey, we're doing something today. You guys are there to help, and you want to figure out if it is a right fit before people have to get into the messy business of doing all the actual hard work into this.
Yeah, and it's interesting too, Wally. A lot of times we are just educating our members about efficiencies that they can utilize using maybe like our online banking tool or a mobile app. And then, or saying like, hey, do you know that there is a financial solution to X? And maybe they might not act on it. But I think that our team does a really great job with planting the seeds and showing some benefits. And some of the members go home, they talk with their spouses, or they just sit on it and they wonder. And a lot of times they end up coming back asking more questions or taking advantage of what we discussed with them. And I think that's what's important for us is it's not a singular transaction that we're trying to accomplish. We are trying to be your full banking relationship. And the really, you know, fly-by-the-night transactions, that's not what builds those trust and that relationship. And so it's just really important to us that you see us as your full banking relationship and someone that you can come to with questions and options, and that we know that sometimes you're not going to act on all of those, but at least we know that you know that you have them available.
Well, and I'm going to go a little off script here just because I'm curious too, because I talked now with Maggie, I've talked with so many of the team over at Fond du Lac, and I can see this constant theme of this passion to try to help people. And I'm curious, where did the passion for Empeople, what is your favorite thing about working for this group? Because it sounds like you're glowing about it.
I really like what I do, and I think that we really try to hire talent that is passionate about the community and about the work that we do. And I think it's just really important. You know, I like I said, I've been here with over 10 years, and I used to work for a bank, that bad word, bank. And it is just a little different working in the credit union space and then working for Empeople where everybody's value is right in line. And the talent that we have is pretty incredible. And if you visit any of our branches there in Wisconsin, you'll experience that, the care, the time that we spend with our members just to make sure that they know that they're part of something special. Because we want them to feel the way we feel when we come to work every day.
Well said. We're talking today with Maggie Pavano, the VP with Mortgage Sales with Empeople Credit Union. And Maggie, I know when we talk of loans, there's other questions once you get the loan closed. What exactly happens when you get to that point?
You know, like I've mentioned a couple different times, like it's not just a transaction. You know, it's holistic. It's your full all the life stages you go through, and what's next. And we don't, after your loan closes, if it's a mortgage, an auto loan, we have a team, they're called relationship managers. And I see them kind of like as like private bankers for our members. And you are given a private banker or a relationship manager, and they work directly with you to actively manage your mortgage to make sure that this loan continues to fit your financial picture year over year. And if it doesn't, what can we do to adjust it? They also help on the front end when you're looking to almost get ready to buy a house, creating budgets, increasing your credit score. But these relationship managers are there during the life of your relationship with Empeople Credit Union, giving you financial tools, ongoing financial guidance, and just making sure that your needs are met and it's tailored to what's going on in your life. It's not a one-size-fits-all. We want to make sure that we help you create systems and goals for life because we all know that life continues to change. The world around us continues to change, and we want you to make sure that you know that you have a resource here at Empeople Credit Union.
One of those things in there really excited me too because I'm an awful budget guy. I like to, I'm like, I know I have roughly this. I'm going to spend, I don't know, somewhere around there. If I go in and actually I'm like, I don't know how I'm going to budget this. I don't know how I can actually afford this. There's ways that you guys can actually kind of help me figure out how I can best live my day-to-day life to make sure I can afford and live in this new home.
Yeah, it's kind of funny because we have a lot of tools and resources for our members, and our relationship managers have different levels. I mean, you could literally have a comprehensive review with one of our relationship managers, and they'll tell you how much you spend on coffee a month, Wally.
Oh,
and,
no.
and they might even challenge you to say, let's start small. Let's eliminate one coffee run a week. Let's see how that goes. Or because a lot of times, too, we don't even know where our money's going. And sometimes that's the hardest part is really peeling back some of those layers and knowing where your money's going. And that's what our team helps you not only do, but they also kind of take you through a process to say, like, all right, where are areas that we can cut out? You have a goal to be a homeowner, which is going to require X amount in your savings. Here's your budget.
Maybe you don't need that third pizza of the month.
Yeah, right. Just two. Yeah, so our team does a great job with just helping create a plan. And then if you come in and let's say, it's okay to say, hey, I fell off. I bought that third pizza. That's all right. That life happens. But that relationship manager is there to say, all right, let's try again. Let's reset. Because it's okay to fall backwards. But as long as you keep moving forward and try again, that's what our team's dedicated to do with you.
Well, that's the key with life in general, right? Like you fall down, you have to get back up, you learn from the mistakes. And it sounds like you guys are almost holding us accountable where we get to look in our own and be like, hey, this is how I can improve. And it's probably going to help not only with buying a home, but for everything else in your day-to-day.
Yeah, you bet.
Well, I would love to ask as well, because listeners that want to get involved, they want to learn what Empeople's about, how they can get involved themselves. How can people learn about Empeople Credit Union? How can they reach out?
If you want to stalk us, feel free to go to our website at Empeople Credit Union. You can just search that, and it'll pop up. We have some really great different web pages that just talk about our ongoing financial guidance. You can actually see the mortgage team on there. It shows us all of our locations. But if you want to get belly to belly with us, we'd love to have you in our branches. We have one in Lamira, Mayville, Theresa, and then a brand new one in Fond du Lac. It is beautiful.
It's gorgeous.
So if you want, go into any of our branches and kind of just say, I'm interested in a membership, or I'm interested to see what Empeople has to offer. And our team will sit you down and kind of probably ask you, well, tell me what you don't like about what you're currently doing, and just really uncover, is there any areas that we can benefit you by coming over to Empeople?
Well, they're going to have a chance, too. In Fond du Lac, next month, we're going to have a brat fry. Come on out. I'll make sure that throughout the next month, you're going to hear plenty about that, too. But a chance to get belly to belly, as you said, at a new location right here in our area. You clearly love it. And it's awesome to talk to somebody that's passionate about what they do. Do you have any moments or memories that you can point back to and say, this is awesome. I can see the difference we're making. This right here, it changed somebody's life.
Yeah. I mean, every day. We actually have a website or a team thread internally where our team can kind of post those wins. And we get a lot of feedback from our members that say, man, I was in a pinch and you guys helped me out. But one of my favorite ones recently that aligns with my team directly is, we had a member that came in 18 months ago. They had a really messy divorce, right? Big life change, huge life change. And they missed some payments. and racked up some credit card debt. Their credit score was a 586. No one's probably lending you anything at 586. And our relationship manager sat down and said, well, let's mark the tape. And there's only one way to go. And we put a plan in place based on what they needed to do to get their credit score up, create a new budget, because they traditionally did not take care of the budget in their household, and create a savings plan. They knew that they wanted to get back into home ownership to have stability for their family. And within 18 months, they were able to get back into home ownership, raise her credit score by 120 points. And that's the impact. That's the difference, is that, and for those 18 months, that relationship manager stuck with them and made sure they stayed on track, was their accountability partner to get them all the way to success. And they're not done, because now that she's in the home, that relationship manager is with them still to make sure that they're actively managing their mortgage and that her budget is staying intact now as a new homeowner.
That's so encouraging. Credit scores, it terrifies me to even think about. I haven't looked at mine because I don't want to know what's out there right now. But for when you look at credit scores, what is that number that we really need to aim for? What do we need to have to really be able to proceed and try to get a home?
I really would say, strive for a 680 is kind of you're there. Anything over a 740 is considered perfect, though. And wow. And why that matters is your interest rate that you're going to qualify for. A big piece of that is your credit score. So you always want to put your best foot forward when getting a loan, because you're going to then get the best credit or best interest rate that you qualify for. And so if you are a 680 and maybe you don't have a need today for a car or a house, our team will give you tools and resources to keep notching that up. So when you are ready, you're getting that best interest rate that you qualify for.
Oh, man. This is bad news for you guys, because you're going to have me around too much now, because it's going to happen. Because I'm telling you, Maggie, I'm a mess. And it sounds like I need the people at Empeople to help me out a little bit.
There you go. Well, we can do it. Wally, we can do it.
I hope so. Well, because I'm renting right now. I have an apartment. And for renters out there that are listening, they're like, I don't know if this applies to me. I don't know if I want to rent long term. I'm curious, is renting throwing away money in your eyes? How do you perceive people that, like myself, that are renters?
I try not to make it so black and white, because no, it's not throwing away money. I mean, you have, you're in I think it's all situational too. Do I think, and it's not a one size fits all. And so it's just based on what are your goals? What do they look like in 5 to 10 years? What's your family look like in 5 to 10 years? Or in the next year? Because not that technically, some will say it's throwing away money, right? But also a mortgage or home ownership also comes with a lot of responsibility. You have the homeowner's insurance, you got the yard, you're in charge of everything financially and responsible. Where when you rent, you have limited responsibility, making the payment on time, maybe some odds and ends, but that landlord or that owner has a lot of that responsibility. So I don't want to call it throwing away money, but I will say if you have thought about home ownership and you have not talked to a mortgage expert, there's no obligation. What's it hurt? You could always call in to say, if I was to buy a house, would I qualify? And how much would I qualify for? And a lot of times you'll be surprised at what you qualify for. You'll be surprised at that most are ready based on their current situation, but they just haven't talked to somebody and have a lot of assumptions about the process.
Well, no risk. I like that. You can walk in, you ask questions, and people don't, again, goes back to that pressure word. You don't feel that pressure that I have to do something today. If you don't know if you qualify, you are the people that we can reach out, and thank God for that. Because it sounds like there's a lot of questions that you're going to be able to answer that it's not just me that have out there.
Yeah, you bet. Yeah.
And for people, there's a lot now, and I joke about it all the time. I don't know how long they're going to keep bringing me into this building with my key working. So at some point, maybe I'm going to have to be self-employed. Self-employed people out there that are wanting to buy, is there a way for them to qualify as well?
Definitely. It's not a one size fits all. We see some 1099s, we see self-employed. There's just a lot of different type of employment that we see, self-employment is a little bit higher of a risk. So if you are self-employed, that magic number is 2. We like to see 2 years of tax returns, and that just shows a history, and that kind of shows where you're going as a self-employed individual. And to be honest, most people that are self-employed, you really don't gain your traction until year 2 or 3.
Mm-hmm.
And so being self-employed should not stop you from home ownership, refinancing, or even inquiring about a home loan.
Well, and what happens if I'm moving in a few years here and I'm not necessarily sure the steps or what comes first? Is that as simple as reaching out to you? Is there other steps I have to do first?
Yes, because that question, because it kind of reminds me of there's different products. So like if you come in and say, I want to buy this house and I know I'm moving in 2 to 3 years, that is a total different conversation than someone that wants to be in that home forever or for 10 years. We have fixed rate options, we have adjustable rate mortgage options. All of them have leading market rates, but they do look different based on your situation. And so all of that information is collected to make sure that when we're providing you with loan options, that we're providing you with great loan programs and products that fit your financial picture.
And then for people that are wondering, and hey, you know what? When is the right time? Is there a wrong time to reach out to them people? Or is there just like, hey, you know what? You might not be ready now, but let's help you get to where you need to be.
Oh, like you had said earlier, knowledge is power, and knowing where you're at matters. And sometimes it can be scary, especially if you know or you feel like maybe my credit's off, or you feel ashamed that you don't maybe have credit card debt or not the amount of savings that you should. We see it all. And so no, there's no judgment zone. But I think it's important to know where you're at today so you can get to where you want to be in the future. And why not do it with a team of experts? I kind of like to say, too, is most people will get there, if they have a goal, kind of like having a personal trainer. Like if you don't have a personal trainer and you have a goal to lose 15 pounds, you'll probably get there eventually. You hire a personal trainer, I bet you lose that 15 pounds in half the time compared to if you did it by yourself.
I like that a lot, actually, because that's a great way in goals in general, where we a lot of times will have those goals in your head, like, I want to do that, but you don't actually take the time to map out the path. And with Empeople, you're the personal trainer. You want to lose weight at New Year's. It's not just, maybe I shouldn't have that third pizza of the month, but you got to talk and actually do some active work at the same time. So reaching out to you guys, I like that. Personal trainer, man. Did you come up with that yourself?
Rolls off the tongue.
Yeah, it does roll off the tongue. All right, well, good. It sounds like we're going to have to find our own Maggie Pavano personal trainer in the area for people that are listening. But we only have about 4 minutes left, Maggie. So I want to kind of open the floor to you here, first of all, because if there's something that listeners need to remember, if there's one thing about working with Empeople for a mortgage, what should it be?
I think for us, when working with our members, especially in, our communities, is that, our members are gaining long-term financial partners. And we want to help you create processes and systems that work in your daily life. You can have experts that want to force Excel spreadsheets or budget documentation that takes hours to complete. That might work for some, like a small 1%. But like most, that's too much. And so maybe they can do it for a month or two, but then it's gone. They can't. And so we really try to create processes and systems. If it's about credit score, budgeting, creating a savings plan, getting into home ownership, around your lifestyle that is convenient and easy and trackable with our resources that we have and our team that we have in place. We want you to be able to make confident decisions and understand how not only your home supports your overall financial future, but choosing the right bank and the right partners can really impact your financial future. And I think that's what Empeople does really well. Like, I keep, giving a nod to our talented staff, but when you go into any of our branches, you'll experience the Empeople difference. I really do think that we really strive for that overall experience, and we want you to come back. We don't want you to come and do one transaction, and then the next time we see you is when you need something else. We really want to be there during every life stage, every big or small moment that you have, right along with you hand in hand.
When I walked into the Fond du Lac location for the first time like 2 months ago, I would have thought that I'd known the people for years. It was just immediate. Hey, Wally, how you doing? Good to see you. Come on in. Like, just genuinely good people. And this is a stupid question to end it on, but I'm curious, Maggie. People, there's people in the word. I'm sure that's on purpose, right? That had to be a purpose to put that there.
Well, some brilliant marketing people came up with the name. Some like it, some don't, just to be honest. But the EM, the way, I mean, it means a lot, but for me, it's like empower. And we have the people to help empower you, or you are the person that empowers yourself. And so the EM, part of it is the empowering. And it's important that we empower our members, that me as a leader, I empower my team, and that to meet the goals that we all want to strive for in life, not just with your finances, but overall. Like, it's so cool. Our relationships are so deep, and they run really, through and through, that sometimes they just call us and say, oh my God, I know that you knew that we were trying to, have a baby and we're expecting. And I'm like, it has nothing to do with their finances. We are just we're integrated into their life. And I think that's what's really special about the relationships that our teams develop.
Oh, I'm so happy I asked. I was worried it was a dumb question. What a perfect way to wrap us up. Empower the people with people. I love that.
Yeah.
Well, Maggie, I want to thank you so much for spending a little bit of time with me today. You taught me a lot. I don't know enough about this stuff, and even in a 45-minute conversation, I already know I got to go into Empeople, and I've got to cross some T's and dot some I's going forward. But thank you so much today. Any final words for us?
No. What do you put on your brat?
Oh, yeah, we got the Brat Fry coming up in just over a month. Follow along on our Facebook page, People's Facebook page, and People's even going to be nice enough. They're going to be covering brats for people while we're out there. So it's just added incentive, Maggie, to get out, have a good brat, and go belly to belly, as you said.
Yes, brat.
Well, thank you, Maggie. That is going to do it for us today on Taking Care of Business. The proceeding was a paid program. Advice and opinions expressed during the program are solely that of Empeople Credit Union, not WBEV or Good Karma Brands.
Catch Z's with Slumberland and catch